You are running out of time, and you know it. Every year you wait, compound interest loses its power. Every flashy purchase, every get-rich-quick scheme, every exciting financial decision, stealing your future, one dopamine hit at a time. The average millionaire drives a 4-year-old car, eats dinner at home 6 nights a week, never owned a Rolex, so boring you would walk right past them at a coffee shop. Meanwhile, the guy in the leased BMW posting vacation photos, drowning in debt, playing dress-up, pretending to be rich while going broke. Here is the uncomfortable truth that separates winners from everyone else. Getting rich is not exciting. It is repetitive, disciplined, mind-numbingly boring. And that is exactly why you can do it. Because while everyone else chases excitement, you are going to chase freedom. While they optimize for appearance, you are going to optimize for reality. While they stay broke, looking rich, you are going to get rich, looking average. The window is closing. Every day you wait is another day your competition pulls ahead. Let us fix that. Before we dive deeper, hit like and subscribe so you never miss our videos. And share this with someone who needs to see it. The excitement paradox. You have been lied to your entire life about what building wealth looks like. Movies show entrepreneurs in boardrooms making million-dollar deals. Social media shows 20-somethings flipping houses and buying Lamborghinis. Finance gurus sell you on the thrill of day trading and crypto moonshots. Sexy, exciting, and almost entirely fiction. Here is what real wealth building looks like. Waking up at the same time every day, packing lunch. Investing the same percentage of your income every single month. Driving the same reliable car for a decade. Saying no to weekend trips because you have a savings target to hit. Boring. Repetitive, unsexy, and it works every single time. But here is where it gets interesting. The people who actually build 7-figure net worth, they invest a quarter or more of their income. Not occasionally, not when they feel inspired, every month, like clockwork, rain or shine, bull market or bear market. That is not a strategy. That is an identity. And most people would rather stay broke than adopt it. Not you, though. You are different. You would not still be watching if you were not. So let me show you exactly what separates the wealthy from everyone else. The Boring Behaviors Blueprint researchers who study quiet millionaires, everyday people with 7 figures who never made headlines, found one consistent pattern: disciplined, long-term investing, automated contributions, diversified portfolios, never touched, not exciting stock picks, not crypto gambling, not real estate flips, just boring index funds, automatic deposits, decades of patience. The insight is simple but powerful. It comes down to your behaviors with money, not your income. Read that again. You do not need to earn more. You need to spend less and invest the difference. That is the entire game. And once you understand it, everything changes. Behavior 1, automate everything. Stop relying on willpower. Willpower is garbage. It fails you when you need it most. Winners remove themselves from the equation entirely. They set up automatic transfers from checking to investment accounts. The money moves before they can spend it, before they can talk themselves out of it, before life gets in the way. This is paying yourself first, not paying bills first, not spending first, investing first. Everything else comes from what is left. Most people do it backwards. They spend on lifestyle, pay bills, and hope something is left to save. There is never anything left. That is why they stay broke while boring people quietly build fortunes. Which one are you going to be? Behavior 2, practice intentional underconsumption. And here is what wealthy people actually do with their money. They cook at home, shop at Costco, mend clothes instead of buying new, drive their cars until the wheels fall off. Not because they are cheap, because they understand something you need to burn into your brain right now. Every dollar you spend on lifestyle is a dollar that cannot compound. That dinner out could have been $200 in 20 years. That new car smell, it could have been your kid as a college fund. That designer bag could have been a month of financial freedom. Here is the thing nobody tells you. The difference between looking rich and being rich is simple. Looking rich means spending money you do not have on things you do not need. Being rich means not spending money you do have on things that do not matter. One builds debt, the other builds empire. You already know which path you are choosing. Behavior 3, start early and never stop. Tame in the market beats timing the market every single time. The data is overwhelming. Stop waiting for the perfect moment. It does not exist. Start now. Start ugly. Start small. Just start. Now let me show you why this matters so much. $500 a month starting at 25, 7% average return. By 65, $1.2 million. Start at 35 instead, half that. Same contribution, 10-year delay, half the wealth. That 10-year head start is worth $600,000. Not because you invested more, because you gave your money more time to work. Time is your biggest asset or your biggest enemy. You choose which one it becomes. The discipline gap. Here is what separates millionaires from everyone else. Roughly 3/4 of them describe themselves as disciplined financial planners. Less than half of the general population says the same. That gap, that is the gap between retiring wealthy and retiring broke. Discipline is not sexy. It is showing up when you do not feel like it, saying no when everyone else says yes, doing the boring thing consistently while everyone else chases excitement. Most people can be disciplined for a week, maybe a month. Millionaires are disciplined for decades. That is it. That is the separator. Not intelligence, not luck, not connections, just decades of boring consistency. Ready for the part most people never figure out? Behavior 4. Ignore lifestyle inflation. This is where high earners destroy themselves. They get a raise and immediately upgrade everything. Bigger house, nicer car, fancier restaurants. Income goes up. Savings rate stays flat. Net worth stays stuck. Millionaires flip the script. Income increases. Lifestyle stays the same. Savings rate increases. They bank the raise instead of spending it. This is how middle class becomes wealthy, not by earning more, by keeping expenses constant while income grows. The gap between earning and spending is where wealth gets built. Widen that gap, protect that gap, guard it with your life, because this next behavior is why people earning half your income have 10 times your net worth. Behavior 5. Treat consumer debt like poison. Debt works in 2 directions. When you borrow to buy depreciating assets, you pay interest to destroy your wealth. When you invest in appreciating assets, you earn interest to build your wealth. Car loan, credit card balances, financed furniture, wealth destroyers. Every dollar spent on interest is a dollar that could have been compounding in your favor. The average American carries thousands in credit card debt at double-digit interest rate, over $1,000 a year just to service. Money thrown into a black hole. While you are paying interest, millionaires are earning it. Boring people do not finance lifestyles. They buy what they can afford and invest the difference. Simple, boring, effective. Behavior 6. Live below your means forever. Most people think the goal is to get rich so they can finally live however they want. Wrong. Millionaires live below their means before they are rich, while they are building, and after they are wealthy. Because living below your means is not a temporary sacrifice. It is a permanent identity. It is understanding that true wealth is not about spending. It is about options, freedom, control. Here is the brutal truth. The person driving the paid-off Toyota with $2 million invested has more freedom than the person in the leased Mercedes with negative net worth. One is actually rich, the other is performing. Which role do you want to play? The blueprint. You have the behaviors. Now let us systematize them, because knowledge without action is just entertainment. Step 1. Lock in your savings rate. The average American saves single digits. Millionaires save 25% or more. That gap is your opportunity. Calculate 20% of your income. That is your minimum monthly investment. Automate it today, not tomorrow, not next week, today. Step 2. Build the boring portfolio. Forget stock picking. Forget crypto. Forget complicated strategies. Total stock market index fund. Total bond market index fund. Rebalance annually. That is it. Decades of data prove passive investing beats active trading. And not because it is exciting, because it works. Boring, effective, proven. Step 3. Eliminate friction. Set up automatic transfers on payday. Money moves to investments before you see it, before you can spend it, before you can change your mind. Your job is not to have discipline every day. Your job is to build a system that does not require discipline. Design your success. Do not hope for it. Step 4. Protect yourself from yourself. The biggest threat to your wealth is not the market. It is you, your impulses, your emotions, your desire to keep up with broke people pretending to be rich. Cut up the credit cards. Unsubscribe from marketing emails. Delete shopping apps. Remove temptation instead of fighting it. Willpower is finite. Systems are forever. The real cost of excitement. Every exciting financial decision you make is probably wrong. Day trading, crypto speculation, leveraged real estate, angel investing feels productive, feels like you are doing something, but the data does not lie. Most day traders lose. Crypto gamblers underperform boring index funds. Speculators go bankrupt when markets turn. Meanwhile, boring people investing in index funds for 40 years become millionaires with mathematical certainty. The cost of excitement is your financial future. The reward of boredom is freedom. Choose the timeline. Let me show you what boring consistency creates. Start at $25,000, $45,000 salary. Save 25%. About $937 monthly. Age 30, $70,000 in net worth. You are driving a used car while friends lease new one. You feel behind. Age 40, $400,000. Friends are still broke. You stay quiet. Age 50, $1.1 million. Kids' college is funded. Retirement is secure. Still driving boring cars. Age 60, 2.3 million. You retire early. Friends work until 70. 40 years of doing the same thing. No excitement, no shortcuts, no secrets. Just math, time, discipline. That is it. The identity shift. Here is the final piece. Stop identifying with your income. Start identifying with your net worth. Most people say, I make 6 figures with pride. Millionaires say I am worth 7 figures with quiet confidence. Income is what you trade time for. Net worth is what you keep. Income feels good. Net worth is good. Stop optimizing for what you make. Start optimizing for what you keep. That shift changes everything. Because being boring is not deprivation. It is delayed gratification. It is choosing future freedom over present appearance. It is understanding that every boring choice today compounds into extraordinary options tomorrow. The majority of millionaires are self-made, not through excitement, through boring, disciplined, repetitive behaviors that most people refuse to do. You are not most people, you never were. Automate, underconsume, start early, stay disciplined, avoid debt, live below your means, build boring, protect yourself. You have the blueprint, you have the behaviors, you have everything you need. Will you stay exciting and broke or get boring and rich? Your move, make it count.